and welcome to Charting the Markets. You're with me, Sean Murison, Senior Market Analyst at IG South Africa. On today's economic calendar, a lot of data coming from the US this afternoon. We do have weekly unemployment claims, ADP non-farm employment change data, and obviously that's ahead of tomorrow's official non-farm employment data. In addition to that, we do also have that JOLTS jobs opening, and we have our second day of OPEC meetings. So relatively busy calendar for today, especially in the early afternoon. Let's look at some charts. Starting off with currencies and looking at the US dollar basket. Now, over the short to medium term, we're still sitting within that range-bound price environment. And for a while, we've been talking about that longer-term trend for the dollar index, the DXY, being down. That's as the price trades below that 200-day symbol moving average. Now, what we do see now is the price is testing that resistance of that 200-day simple moving average. Until that is broken, we're still considering keeping a short bias to trades, but that could change in the very near term. We do have quite a bit of data coming out over the next today, tomorrow, that non-farm payroll being key. So at the moment, if this level holds and we see a bit of a sharper retracement, we see this red candle or even next candle sort of moving below more than the halfway mark of this green candle, would say that we do have a bit of a reversal in place. We start targeting a move back down to 101.85. In that situation, you could look at having a close above this 103.15 level as a stop loss indication. Now, a lot can happen. If we do instead get a breakout, we start looking to the upper levels. Now, I just want to say that if we do break above that 200-day simple moving average, the suggestion is that that downtrend has been broken. It doesn't necessarily assume a longer-term uptrend for the dollar index, but it does suggest that we can now start looking at keeping a bias to either side, long or short positions. And certainly if we do get a breakout to the upside instead of that reversal, we'd start looking for a move to 104.35. That situation would make it a little bit trickier as to where you put your stop, but certainly below a 1 or 2 day low might be a consideration depending on your threshold for risk. The euro dollar. Now the euro dollar, again, short to medium term consolidation, a broad consolidation between that 1.0513 mark and that 1.1065 mark. In the short term, last week we talked about this little consolidation here, and we've had the downside break, and we are drifting a little bit lower and back towards that 200-day simple moving average on our chart. Now, we are still above that 200-day moving average, so we're not looking at shorting the move lower. We're going to see where that move ends. We want to see a bit of a bullish reversal and look for long entry. And then we start targeting those moves up and looking at that reversal low as a possible stop loss indication, where we start to change our view. If we see that price actually retracing a little bit further and trading below that 200-day simple moving average, that would suggest that that longer-term uptrend has now been broken. And not necessarily a new downtrend. We want to see a move quite a bit further, but take out that major low at 1.0513 before we assume a new downtrend on the euro dollar. And so we'd be looking at changing our bias from long only to long and short, depending on where we are on that trade. We're looking to trade off those levels. But in the short term, we are pulling back after just that short-term downside breakout. And we're waiting for a reversal to go long, provided that we see that reversal before that 200-day simple moving average. We are also starting to move into oversold territory right now. So for a reversal, maybe seeing that stochastic just moving back out of oversold territory just to support the price has stopped falling and now ticking back up, and we could look at further gains. Cable. Now, that longer-term uptrend seems to be a little bit more pronounced for cable, so pound strength versus dollar weakness. We've had a bit of a pullback from that high and a bit of a reversal just below that 1.2665 mark. So the suggestion here is still keeping a long bias to trades. I think this reversal is not really strong enough, though, to have that much conviction. We've seen the price just grinding thereafter. Obviously, that non-farm payroll data will have an effect on how this currency pair moves, especially from the dollar influence side. I think if we're looking for some conviction for a move higher, I want to see a break. And we're looking at this level here, 1.2750. Maybe that's into or through the news, that non-farm news, in which case we start targeting that high initially at 1.2850. And through that, we could start looking at that historical high there at 1.2965. But until this 200-day simple moving average is broken, we're still looking at keeping a long bias to trades. It's just about where to find entry into cable. And so if we pull back, we look for a bullish reversal at one of our lower levels, or alternatively an upside break of this 1.2750 might provide that opportunity as well. Looking at some indices, and starting with that S&P 500. Now, we've seen S&P 500 trade quite firmly into overbought territory. So our previous guidance, we're looking at this bullish reversal or a pullback to end with a bullish reversal. We got that. We've had a nice rally. We've tested the high. Now, this trend has become a little bit extended as we move into non-farm data, and we are starting to retrace from overbought territory. That's following the FOMC meeting minutes last night. So a bit of strength returning in the dollar, some equity market weakness. So we're looking at the S&P 500. We're looking at a bit of a retracement here. Would be healthy as a correction for longer-term gains in that uptrend. So we're not looking at shorting tops. We do have an indication that a pullback is underway. Our first support level there is sitting at about 4,330. We're waiting for this pullback to end with a bullish reversal before we'll be looking for long entry again into that S&P 500, respecting that longer-term uptrend while that 200 price is trading firmly above the 200-day simple moving average. Moving over to Europe and looking at the Germany 40. Now, long-term trend for the Germany 40 is up. Short to medium term, we are in a range-bound sideways consolidation, and that is between levels 15,715 support and resistance at 16,330. Now, we've had a pullback. We are now moving towards testing that support level. We want to see a bullish reversal there before starting to look for long entry on that DAX and targeting a move back up towards 16,330. In that reversal scenario, we'd use a close below that 15,715 as a stop loss indication. And if we don't get that bullish reversal, we do get a break, we'd be hoping for a bullish reversal closer towards that 15,485 mark. If that doesn't happen, we'd just be sitting and waiting. And if we break below that 200-day simple moving average, then we start to change our longer-term trend bias from up to sideways on the DAX 40. Now, the FTSE 100, longer-term trend is sideways in nature. The short-term momentum is to the downside. We're looking at either waiting for a break of that trend line before looking for long entry since our last guidance. That hasn't happened. Instead, we've got the bearish scenario, which is a bearish reversal off this resistance, which has worked out quite nicely. We've had a strong move towards that 7,410 support level. And now what we're seeing is the price breaking below that level. So ideally, we want to see the price start to settle. It is still pulling back. We don't want to catch a falling sword. We want to see this price starting to just reverse closer towards that 7,285 mark before looking for long entry, in which case we start targeting the levels above 7,410 again, initially on the upside, possibly 7,560. Now, if we don't get that and we start breaking below the 7,285 level, we start to consider the sideways trend that is prevalent on the FTSE 100 as moving into a new longer-term downtrend. And then we'd start moving, keeping our bias to the short side on that FTSE 100. That hasn't happened yet, but it is something just to watch. We're watching this being a key level here. We want to see that price closing significantly below that level to suggest, oh, now we've moved into a new downtrend rather than the sideways range-bound environment that we do see in the UK market and the FTSE 100 right now. Moving over to commodities now, and starting off with Brent crude. Brent crude still fighting supply versus demand dynamics right now. We are on the second day of OPEC meetings where we are expecting some supply curbs, especially from Saudi Arabia. That's meeting with a diminishing expectation of global growth, especially from China at this point in time, so on the demand side. So the longer-term bias, how it's looking technically, is that longer-term trend bias is to the downside, despite the rebound that we are seeing right now on Brent crude. We've taken out the $75.10 per barrel mark. We are now moving towards resistance at 78.50. I'm quite happy to sit that move higher out at this point in time, waiting for a bearish price reversal. Again, just waiting for that price to tick back before looking for short entry on Brent crude. We only start to consider this downtrend to be broken if we see that price trading above that 80.80 level and above that 200-day simple moving average. Again, the blue line on our chart, and that would be a confluence of levels right now. So that seems to be quite relevant. But for now, the bias is down. We're waiting for a bearish reversal to find new short entry into Brent crude, and then we'd be targeting the levels lower, first level being 75.10, and if we could break below that 72.20, which is proving to be quite a relevant level of support for Brent crude at this point in time. We've price tested that a number of times over the last couple of months. Spot gold. Now, spot gold is one of the commodities at this point in time, which is really starting to test its longer-term uptrend. We've had a very deep correction of this longer-term uptrend. That deep correction has taken us to that 200-day simple moving average. Now, looking for long entry, we're looking for a reversal, which we did have off that 200-day simple moving average, but we're waiting for that extra confirmation of a clean break of this trend line. Now, you could argue maybe there was a bit of a break there, but I think it's very unconvincing, especially when you follow up with what's happened with this red candle the day after. So right now, what we'd like to see is a fair move above that. And I think it's probably worth waiting for a little bit of extra confirmation, getting above this resistance level of 1945 before getting too long on spot gold. Because we are hovering just above that 200-day simple moving average, suggesting that longer-term uptrend is weakened at this point in time, and it could be broken if we do see some dollar strength. Because there is an inverse relationship between spot gold and the dollar, in which case we change our bias to trades again on spot gold. Platinum, longer-term trend is sideways. So again, we're looking at long or short positions depending on where we are within that broader range. At this point in time, what we do have at this point in time is a bullish reversal. We've just broken the support level, but we've rebounded back up, and we do have a reversal of around about that $905 to $900 per ounce mark. And that does start to target a little bit higher, a move higher, probably initial resistance, you could say about 956 to 960 odd. But we do have a clear line of resistance there at about 980, which would be the upside target. I think if traders are long there, you could have a stop loss maybe below that 905 mark or below this reversal low here at about 890, depending on your threshold for risk. Right, that's all the charts from me. I'm Sean Murison, a senior market analyst at IG South Africa. Thanks very much for watching.